Hello everybody and welcome to this episode of Savvy Investors at VectorVest. My name is Susan HayesCulleton and I'm delighted to be your host for this show. Indeed, also this episode, and particularly I'm very excited about what we have in store for you today. Before I begin, let me just tell you a little bit about why we began this show. Over the past couple of years, the stock market has done an awful lot of things. It has been very volatile. It has factored in a lot of news. It has been hugely, noteworthily changing when it comes to what we saw in 2020. It recovered from what happened in 2008. It has broadened its reach in terms of the number and the access of people who are joining it from various different products and through various different technologies and of course different parts of the world. All that said, it can be a place full of fear, it can be a place full of uncertainty, and it certainly is a place full of learning. So what I wanted to do is work with the team at VectorVest right here on YouTube and to bring a show to you where we would deal with all three of those. We would deal with the fear, we would bring the education, and certainly we would help you to navigate the uncertainty. Now, along the way, I've had some really interesting episodes. My first one is continuing to gain more and more views, and that is how to read an earnings report. And then following on from there, I've taken in various different topics, but one of the most recent episodes that has got a lot of attention is an interview that I had with Steve Chappell. To those of you who are familiar with VectorVest, Steve Chappell is somebody who has been part of the business for a very long time, but he is also one of the people that I consider to be one of the best educators within the stock market. And it was from there then that, of course, that I got the inspiration about who else in the VectorVest community would I bring to our audience. And that is why I arrived on our topic today to talk to Glenn Tompkins. Glenn is a guy who has, first of all, is no stranger to anybody who is familiar with VectorVest. But for those of you who don't know VectorVest, Glenn Tompkins is a person who truly knows how to distinguish news from noise. And I am going to tell you a little bit more about him in a couple of moments. But before I do, can I first of all ask you to populate into the chat where you are tuning in from? I always start off every episode like this to see where people are joining us from. So can I please ask you to populate into the chat where you're tuning in from now, live. And I can see that these are starting to flood in here into my screen. So I can see that we have got Martin who's joining us from St. Lucie in Florida. We have Steve who's joining us from Tuscan. Stephen is joining us from Delray Beach in Florida. I've been there, Stephen. Thomas is joining us from St. Louis in Missouri. We also have John who's joining us from Orlando. William joining us from Chicago. Manu joining us from San Jose. Mike is in Edmonton. HG is in Ontario. LD is from Houston. David from South Dakota. Greg is from Cleveland in Ohio. Interesting, we have a really significant US-based audience. I often hear of people who can join us from all over the world, so it'll be interesting to see what other names come in here. We have Irum is joining us from Chicago. Albert is in Canada. Seed of Faith is in New York City. Dennis is in Sunnyvale, California. Lyle is in Albert. Steve is in Alameda in California. Cecilia in New York. Kent is in Greenville. Keep them coming. It's always intriguing to see where you're joining us from. Siva is here from Vancouver. And I do hope that lots more of you will get involved and tell us where you're tuning in from. If you are not joining us live and you are looking at this on the recording, which of course the recording is now, as I'm speaking, being recorded onto YouTube, please do tell us in the comments where you're joining us from as well. Oh, we have our first European, well, the first person who tells us they're from Europe. Alfred is joining us from Bavaria in Germany as well. You're very, very welcome to each and every single one of you. I am here live. It is currently 4:04 here in Dublin. Glenn, of course, is joining me live from North Carolina as well. We'll be bringing him in a few moments. But before we get to that, I just want to tell you a little bit more about our topic today. First of all, of course, as always, I'd love to hear your thoughts. So what do you feel is distinguishing between the news and the noise when it comes to the stock market? When it comes to investing, what do you feel is news and what do you feel is noise? What do you feel distracts you? What is the things, or what are the channels, or what is the type of information you can get that can be really interesting listening to, but on the other hand can actually not get you very far? And on the other hand, what do you feel, and again I invite your answers in through the chat, what do you feel is real information? What moves the dial? What do you really listen to? What do you seek out? And who are those voices that you tune into? I'd love to hear your thoughts on that, because I think that as somebody who has been investing now for quite some time. I'm somebody that has very much established a news routine. I am somebody that now knows how I want to consume my information, where I get it from, and when I'm particularly in environments where they can be very uncertain, I know where I want to go, and I know how to take away the emotion, look for the insights that I need to look for in order to make decisions, and then check myself thereafter to make sure that I have that routine, that I am checking, and that I'm constantly updating. So back to Glenn. And as I say, I'm interested to hear what you have to say on all of those questions that I've just posed in the chat. Please do pop them in there, and not alone will I answer them, but I'll put them to Glenn as well. When it comes to Glenn, let me tell you a little bit about him. First of all, he was one of the very first VectorVest instructors that I met when I joined the company in 2011. And I remember meeting him in North Carolina, and as anybody that knows him, who's part of VV Nation, as any of you will know, Glenn has lots of Glennisms. And there was words that he taught me that didn't exist in the English language, and they still potentially don't if we had to look to the Oxford English Dictionary. But as you'll all know, he's got his own way of doing things. But it became very clear that as he was training me in the VectorVest program, and indeed in line with all of his investing experience himself, this is a man who truly knows how to navigate the market. I remember him telling me about his experience of 2008 and shorting. I remember him walking me through what relative safety meant and how it was different to the VST indicators. Again, to anybody who's not familiar with VectorVest, they're proprietary indicators that VectorVest has, and we'll get back to those. But I remember him really and truly walking me through them, and this wasn't information that he had got out of a book. This was something that he had lived and truly breathed. And then also, over the years, I've been very fortunate to be on a Hot Stocks panel with him. I've also been on his mid-afternoon update. I have been a guest on Trending Thursdays. So Glenn and I have often had the fortune of being able to be a tag team along the way. And that's why I wanted to bring him back, where I could put him in the hot seat. And because there's lots of questions that I have to understand the nature in which Glenn invests himself and the way in which he navigates the market himself, that if I'm interested in these, I thought certainly people who are part of VV Nation, people who are savvy investors at VectorVest, people who attend this show, they are likely to know too. And also, he is a guy, and anybody that has ever heard him, he is a guy that has lots of his own thoughts. He likes to bring his own opinions to bear. I like the way he challenges what's going on with the central bank. I like the way he challenges what's going on out there when it comes to how people are handling crypto or the approach people are taking to ETFs. I like the fact that Glenn has lots of his own opinions. It's for that reason that I really wanted to bring him on the show today. Just before I do, and I'm going to be bringing him in about 15 seconds, I just also want to point out here that Mirsad is joining us from Iran. I think, Mirsad, you might be the first person that I've had in the show who has told me that they're joining from there. And Roy is joining us from Atlanta, Georgia. Roy, you're very welcome. Mike says, not Sachs, Bloomberg or Kramer, they're just noise. Entertaining noise, sometimes very educational noise, but it's interesting, Mike, that's your take on it, and we're certainly going to be putting a range of questions like that to Glenn. So, on that note, I am now going to bring him in and welcome, Glenn. Welcome,
Howdy.
Glenn. I did say you were going to be joining us live from North Carolina. I'm wondering though where exactly you are now with that type of background.
Well, it's Western Wednesday, so I gotta have on the cowboy hat. Something we started a couple of months ago. I just don't have on the cowboy boots today, but I got the cowboy hat on to represent Western Wednesday. So I wanted something kind of Western behind me as far as the scene. Just gonna go, yeah! Yeah, that's what I want to do. Okay.
Good stuff, Glenn. Well, we are ready to go. And first and foremost, of the introduction that I gave you, because I know you were listening there in the green room, of the introduction that I've given to you, how does that sit with you? Do you agree with me that you are somebody that has really walked the walk, somebody that has lots of your own opinions, and you know every corner of the VectorVest system? But also, we have been fortunate to be in a tag team before, and we've had tete-a-tetes, as they say. But would you agree with that introduction, or is there anything else you'd like to tell to our audience today that they don't know about you?
I think that explaining that I've been with VectorVest for as long as I have, I've had the privilege of helping to bring you on board as far as educating. That's what I do. That's what I do. And from that perspective, I like to have fun. I think that there's so much out there with people in shirt and ties and I like to just talk to people in layman's terms because those are the people who are investing in the market and they want to know how to invest in the market. And I try to make it simple. But when we talk about news and noise, that's important because those names that popped up from Mike, is what did you say? They were entertaining.
I
You
said
know,
they can be entertaining and they can be educational, but there can be a lot going on there.
and when you're under a big umbrella like those people are, there's an agenda.
Mm.
I like here at VectorVest, it's not about us talking about what you want to hear. It's telling you the things that you need to hear. And therein lies the difference between news and noise. Noise is, hey, this is going to do this, go buy it. Well, something, we have the power of a VectorVest software that helps us to make the decision about whether or not it's the right time to buy it. The fundamentals behind it. Is the news just a technical move to move the stock's price higher? And if it is, then you need to know how to invest in it. One of the biggest issues you have is taking the news, buying a stock, not understanding if it's news or noise, and holding it way too long and losing all your profits.
So, on that note, Glenn, let's get right into the heart of it and let's come up with a couple of ways in which we can help people distinguish between the two. Can we start off by talking about your news routine? How do you get your news on a daily basis, weekly basis? What do you do? Do you have a routine? Is it sporadic? Do you have certain voices that you listen to? What do you do?
So for me, and Joey, who's in the background, is my producer. When he looks at my screen, when I pull up all my stuff, I've got 60 windows open.
60.
I got 60 windows open at all times. And Joey says, you're going to break your computer. Well,
it's at least 60.
I'll just break.
It's probably more than that.
Say again?
It's probably more than 60.
No, it's 60. It really is 60.
I've never had Joey come into the show and actually voice his opinion at the same time. This is a Savvy Investors First. So thank you, Joey. You're very welcome. So it's probably more than 60, Glenn. And what's there?
Joey's always got...
What's on them?
Joey's always got something to say.
He does, to be fair, but it's worth listening to. So number one, what's on them, Glenn? And number two, how do you navigate that? Because that could all be noise.
So I look at, I'm looking at my screen. I've got, investing.com, CNBC, Yahoo, MarketWatch, Wall Street Journal. And a lot of these things I pay for on my own because I need to get whatever I need to get. And I go through all of those and I see what the big news is on all of them. Normally, if they all talking about the same thing, it's newsworthy. All right. Now I've got a couple of stocks that have been talked about on all of those. Plus, I got so much more. So as I go through those, I find out what stocks are being talked about a lot. Boom. Now I dive in to see what the actual news stories say. Well, this stock got upgraded as a buy, or that's noise. Now, a lot of that is noise because a lot of that is what people perceive, and Moody's and this and that. It's amazing how, because I like this stock now, and then the stock's price moves. All right, so I then look at more news and I dive in to find out some real stories behind what's moving the stock. If it's all about a stock got upgraded, to me, that's noise. But, recently I did on a chip stock, NVIDIA, some news about that, depending on they're coming out with a new product. The new product could move it because now this is part of the company growing. They're, doing the research development. And when I'm looking at news, what is it doing? Is it part of the company's ability to make money? Are they expanding? Are they hiring more people? These kinds of things. Is what they're doing adding to the bottom line to grow their earnings? Remember, their earnings is the engine that drives the stock's price higher. So when I look at news is all about the ability to see what this can do for the company. And you know something, it's sort of like Janet Jackson. What have you done for me lately? It comes down to a song like that. What have you done? If it's just fleeting that they got upgraded, okay, what does that do? That upgrade is not affecting me in my ability to do what I need to do for my product or service. Somebody likes me now, and now they decide to give me an upgrade. But when you look at the chip companies, what's moving the chip companies? AI. Well, that's news. That's news. What else is driving the chip companies? Knowing that they're building factories to take a lot of that supply out of China. That's news. And, you know, it may be long-term because it takes forever for these buildings to get built, for these mega factories to get built. You look at Tesla. They're getting ready to possibly build in Mexico and possibly in India. That's news. All that's going to provide jobs. That's going to give them the ability to make more cars. It's going to grow the bottom line. That's news. So when I look at stories, another big news that turns out to be noise many times is on biotech. You know, they got an FDA approval. They got a phase 3. Stocks move sometimes 200-300%. And then what happens? The stock gets slammed after that. Why? Because it's going to be a profit taking at that point. All right. So news is long term. Noise is a short boost. But you got to understand that it's, you know, is that news affecting the company's ability to grow and make money? If the news is not, then it becomes noise.
So if I could summarize that then, what is news is something that's either driving the earnings or affecting the long term. That is what, that is what we determine that way. Of those, personally speaking, one of the things that I like to do every morning is I like to listen to a podcast on the way into the office, and that takes the pulse on what happened yesterday. And I listen to one in the States, and the reason for that is that then it gives me the ability to hear maybe what I haven't heard already in the evening. But it's a good point actually as well, Glenn, is that if there's various different outlets talking about the same story, that is also news. That's a very good point. Can I ask you, how do you decide on your stories for Trending Thursday? Because with 60 tabs and an awful lot happening, how do you do that? I've shared now how I pick the themes for my shows. It's around fear, or managing emotion broadly, something that can be very educational, and also something that can help navigate uncertainty. This is my compass for this show. But what's yours for Trending Thursday?
A lot of it stems from what's going on in the market. We know we've got inflation. We know we've got rising interest rates. The big news is the Fed going to pause in June, this upcoming month, those things. So every Trending Thursday or every live stream, I always talk about what's going on in the market first. From there, you know, when I look at YouTube is an interesting group of people who are all about what stocks do I need to be looking at. So then I concentrate on that. A lot of times I concentrate on the big moves on stocks. Why are they moving up? You know, when NVIDIA went up prior to earnings and then after earnings, well, you got to talk about that. You know, or when major companies like the best company in the whole wide world, which is, somebody in the chat, type it in. Glenn, can you change? Oh, I can read that. It's not on that, Joey? I guess not. Hold on a second.
So I'll tell you what's going on now, everyone, just in case you're wondering, is we've just, thank you, Matthew, for saying Glenn's audio is distorting, turn gains down, turn stock up, lol. Okay, interesting. You know what I love? Glenn is clearly a pro. He actually puts out a question to the audience that then they can answer here in the chat while he's fixing, his audio. And
right. Check 1, 2. Is that better, Joey?
Just go on. I'm not going to say anything here just to make sure that. Okay.
There we go. All right,
He said yes, right? He typed in yes. And also, of course,
Right.
if anybody has any more feedback about either of our audio or anything, please do let us know. So back to the question that you posed, because we have 4 of the same answer there, Glenn.
So now, Apple, the best stock in the whole wide world, according to Glenn. But I looked at a story that came out where they've got a deal with AVGO Broadcom. They've got a deal with TSMC where they're going to be purchasing up to 90% of their chips from TSMC. Well, we know that the technology within Apple is on their chips and being able to make them better. And those 2 add-ons, those 2 deals, that's news that's going to help push Apple higher and could corner the market on those higher end chips so that they can make their products better. Something else, again, I didn't talk about this, but Tesla, I did. Tesla's building a factory in Mexico, possibly building another factory in India. In looking at that, looking at all of these mega factories that are being built, I recently did a comparison on Tesla's ability to make cars compared to Ford and GM's ability to make cars. By all means, Ford and GM can still outpace Tesla, but Tesla's all EV, whereas Ford and GM are moving over, converting some of their business to EV. So being that Tesla's the big boy in this space and they're adding to their ability to produce more cars, that's news. And that's the stuff that helps to make Tesla move. So it is the stock's ability or the company's ability to grow their business that really, for me, is news, whether, whatever it is. But sometimes noise is earnings. Sometimes noise is earnings, and that's a tough thing to say.
It is a tough thing to say, because one of the things that I really enjoy doing, and people who have been here and on the show a number of times will know, is that I love listening to an earnings call. I find that it is a fascinating insight into a company's world. It is brilliant to listen to the Q&A that people put forward afterwards, etc. But I don't see how an earnings could be noise, Glenn. Money goes where money grows.
That's true. But you know something? Companies are reporting, and I don't want to think that I'm going down a rabbit hole. Companies are reporting the money that they're making. But I don't think that we as investors are looking at the backside of the story. How many people did they lay off to get to that earnings number? How many shares did they buy back in order to get to that earnings number? How much did they raise dividends to get people to come in before getting to that earnings number? Right, so that's one side.
Yeah.
Of it. The other side of it is the forward guidance. So the earnings looks good, but guiding forward based upon what's going on in the market, we're guiding lower. And then the stock gets smoked. But they made money.
So, my take on that is, number one, all of those questions are often answered in the actual transcript, in the conversation. And very few people really listen to the earnings call or read the transcript afterwards, like the shares they bought back, like the raising of the dividend, or why. Apple, for example, recently introduced the fact that they're now going to be having a consistent dividend, which they wouldn't necessarily have been known for before, for example. And I outlined this at the most recent VectorVest International Investors Forum, and I did a deep dive into the earnings call then. So, but I agree with you, is that a lot of the time people focus on the press release or the number, simply the number. EPS is, and how does that compare to guidance? Secondly, about the forward guidance, I think there can be an enormous amount invested, if you'll excuse the pun, into that forward guidance, which is only that, isn't it, Glenn? That's all it is forward guidance. The forward guidance of a company in December 2019 could never have seen what was going to come in the first quarter of 2020. Similarly, I think when you look at Meta's recent earnings, for example, the forward guidance for a lot of the tech companies was completely at odds with the decline in the share prices all of last year. So is there an over-reliance then on the forward guidance in companies?
Well, it could be, but it's not. It comes down to perception,
True,
investors' perception.
true.
That's what it comes down to. Oh, the forward guidance looks like crap. I don't want the stock anymore. But wait a minute, the company just made billions of dollars.
Yeah, yeah. And
So I don't know if it's an over reliance on it as opposed to an investor's perception on what was said.
And of course, the thing about the stock market is we can genuinely put our money where our mouth is that if you feel a certain way, you can reflect that very, very easily by buying or selling or shorting or etc. Mike here says, read the 10K filings, lots of info to be found there. Mike, I agree. And for somebody like me, that is a delightful afternoon. I love settling right in there and understanding and getting to grips with what's going on. And indeed, it's not for everyone, but I agree with you completely. Glenn, not everybody here today is going to be familiar with VectorVest, and I don't want to assume they are. So, for a start, VectorVest is a company that focuses on stock analysis and portfolio management. It's a technology, and it enables people to understand if a stock is a buy, sell, or a hold. There are a range of proprietary indicators in there to help you navigate the news and the noise. And also, we focus on market timing with a range of really cool tools to be able to run your own searches, analyze options, etc. So with that quick introduction, and of course we'll be referring back to VectorVest a lot throughout, I do want to ask you, how do you feel big news events are baked into the VectorVest system through the proprietary indicators and others, and how can we reassure people that we're on their side when it comes to distinguishing between the two?
All right, so when we look at the fundamentals of a company, I get this question asked a lot before earnings comes out on a company. What do you think the earnings should be? Well, I can look at the relative safety, which is an indicator of risk for the stock. Relative safety shows the company's ability to make money quarter over quarter, year over year. When a relative safety is above 1, I can tend to answer the question and say, I can think that this company should beat earnings. But what I don't have is an indicator that talks about forward guidance. And many times a company can beat earnings, but the forward guidance is poopy, and then the stock goes down in price. But it did what I thought it was going to do. It did beat earnings. So VectorVest, the analysis is there to say that it should beat earnings. I look at the relative value prior to earnings. Well, this company is done good, is outperforming the market, or outperforming a AAA corporate bond over the next 1 to 3 years, and it's rising. I still think that the company's business model is in a good enough shape that it's providing value to the investor who's buying the stock. So you put those two things together, relative value and relative safety, I think that you're at least on a good path from a VectorVest perspective to answer the question about if the company should meet or exceed earnings. Let's back up a little bit, because the other side of the equation is always going to be market timing. If the market is going down, understand that the market's direction affects about 80% of the stocks in the market. So even if a company does well as far as earnings, they do have great upside potential, but the market is moving down and moving down at a fast rate. That's going to affect even the best stocks in the market in our VectorVest database. A lot of people will jump up and say, well, wait a minute, this is one of your top VST stocks, but it got hit. Well, that doesn't make it immune to the market's direction. Just because it beat, or even if it missed. Well, it missed because they weren't able to produce the amount of money that they thought that that the street thought that they should have been able to produce. Which bothers me a lot, by the way, Susan, because, a company can meet earnings estimates by 2 cents and get affected adversely. It's like the company made billions of dollars, but you're going to punish it because it missed the estimates by 2 cents? Let me see you, Mr. Writer, go run that company and go make that kind of money on a consistent basis. So
But
that takes me back to that whole earnings sometimes is noise sometimes.
okay.
And you're right. Earnings is the engine that drives the stock's price higher. But sometimes, man, you missed earnings estimate by 2 cents and you're going to get relative value is still good. Relative safety is still good. But this conglomerate of people turn around and go, you didn't do as well as I wanted you to do. So,
and that's why, some people say that the stock market in the short term is a voting machine. And because views can be reflected in the short term, in the long term, of course, it's a very different story. If I could go back, though, to RV and RS, I do just, again, want to point out that for anybody who isn't familiar with either of those terms, Joey, could I kindly ask you to put it in the chat for the link for a free stock analysis? Because what you can do is you can take a stock that you're looking for, put it into the free stock analysis report generator, and then it will email you not just the stock analysis, but also the explanation of both of those terms. So again, to summarize what Glenn has said, relative safety is a stock's consistency and predictability of financial performance, or as Glenn taught me back, 12 years ago now, the ability to make money quarter over quarter and year over year. And relative value is a stock's long-term price appreciation potential. Joey has just put that in there. So if anybody wants to go and investigate both of those terms a little bit more, please do. For any of you, of course, who is familiar with VectorVest, you'll know we talk about RV and RS first and foremost. Can you share an example, Glenn, of a time that you discovered a noise event? And I'm going to call it news, but I mean a noise event. A news event where you felt initially it could be noise, but actually it turned out to be a lot more impactful. Can you tell us a story?
I'll tell you a recent story. AI, when the big news before AI was the Metaverse. Yeah. And I was all on board with the Metaverse, long term. And now that looks like it was a passing thing. I still think that long term, way long term, I think the technology has to catch up with it. Long term, I think it's going to have a place.
So do I.
I got my own opinions on that, though.
So do I.
But AI hit the scene, and it hit the scene quick. Now, it's always been out there, but it was when Microsoft put the investment
the 10 billion.
It turned out to be 11 billion.
Yeah.
It was 10. It was a 1 billion and then a 10 billion, $11 billion, and everybody stood up real quick and was like, "What's going on?" But then you look at the applications of AI. Why Microsoft did it? The applications behind AI were like astounding because of what was needed to grow that business. The supercomputers need to be built. Well, that's where the chip companies come into place. The information needs to be had. Two of my favorite stocks in that space is Palantir and Snowflake. These are companies that gather data into useful information. These AIs use information. I use ChatGPT. The thing is phenomenal in how quickly you can put something in and it spits out something faster than a human being can do. And I'm just using it as an app. And it's like, wow. But how does it get that information? It needs companies like Snowflake, like Palantir. So it's not that AI came on the scene and that's that. It's the other things that AI affected. Computers have to be built. Ooh, that's the computer makers. The chips need to be built. Wow, that's NVIDIA, that's SMCI, that's AMD. And the data needs to be made. That's the Palantir, that's the Snowflake. So when I look at something that's going on, it's not just AI, it's how AI affects everything else that we can invest in. Something else, I'll talk about this. Because of AI, 4 other industries are going to be affected by it. The building of chip manufacturers. Well, how does that affect? So AI, chip manufacturers, well, we got to get on board and we got to build more factories. 4 industries are going to be affected by it. Building cement. Why? Because these buildings need to be built. Copper. Copper is going to have to go into these buildings. Glass. TGLS is a stock that's been on the rise for a little bit. All right. And there's one other more. There's a third one. I forgot what my fourth one is. But it's interesting how AI and the chips, part of AI, how it affects even more industries outside of its realm. That's why, news-wise, I look at these things and how they affect. I'm doing stories on de-dollarization. That's news, but it's in the background. Not a lot of people are talking about it.
Yep.
There's not a lot of people are talking about it. I'm just bringing it to the forefront, and those videos have done well on our YouTube channel. So it's, man, you can stumble on news. I stumbled on to the de-dollarization. That was like, ooh. And then I started looking into it, and it started making sense. And then I started to bring it to VV Nation. So it's not just that you look at the news, it's being able to take that news and look a little deeper and see how it affects an industry or other industries. Because the more you can find that a stock can affect other industries, that becomes very newsworthy.
Well,
The whole Apple thing is very newsworthy because of what Apple does and what they're doing to secure their future.
I think the AI story is certainly very interesting, and I, like you, Glenn, I was keeping a very close eye on the Metaverse last year. I really did. I got right into it and understanding its applicability in work, outside of work, for travel, for introverts, for extroverts, for Google Glasses, for all sorts. Like you, I would think the Metaverse is not going away. If you talk to people who are building it, investing in it, and I don't just mean Meta, I think that there is definitely real world applicability. I heard someone recently, though, say a very interesting saying, and that is that it's not that the Metaverse is dying, the hype about it is. And I think
the hype is, you're right.
Yeah, the hype about it is. I think AI was too futuristic for a long time. We were thinking about it and, the robots in the future will be able to do all sorts of everything. When something like ChatGPT can take something that I might work on for half a day about how I'm going to write something, and it, as you say, spits it out faster than a human could, well faster, and in a way where I can tell it, no, make it more simple or make it more articulate, then we can start seeing, this is really how it works. A teenager recently said to me, AI is cool. I use Snapchat AI so that then I don't have to do my English homework anymore. Now that is when you then hear how applicability happens. But I also would like to put to you that one of the things that I've often heard you say is when you feel the market gets it wrong. And I give you a recent example on this is you invited me in very kindly onto the mid-afternoon update on a Monday. A couple of weeks ago, we were talking about interest rates. And you were saying at the time, I don't think that the Fed increased interest rates fast enough. Should have done more to do more around inflation. And since then, Glenn, in the last interest rate announcement, there was optionality was built in, as Jay Powell said himself. And now, based on what I heard this morning, the bond market is pricing in another increase, about 60% chance of another increase. So perhaps Jay Powell agrees with you. Where I'm going with this.
Jay Powell needs to listen to me. I've been reaching out to him. I'm like, listen, bro, you're getting it all wrong. You need to sit down. Let's go have a cup of coffee. Let me school you on what you need to do. Okay.
Okay. The thing is, Len, what does one do? What does an investor do when they're getting conflicting information? And I'm asking this from the point of view of, if you're a VectorVest subscriber, where do you look in the program for your single source of truth? Or if you're not, how do you define, or how do you decide yourself when you disagree with the market?
All right. So from a VectorVest perspective, we have, you can click on the stock and get news on a stock. But the thing is, it normally leads out to one site. My suggestion is you need to have several sites at your disposal where you can get differing opinions, because I can look at any one topic, go to several different sites and get different opinions. What I need to do is read the article, see what makes sense, see what doesn't make sense. So to a certain degree, as an investor in the market, I've got to discern what I think is real and what I don't think is real. So the onus of responsibility comes back on me to make the decision. Thus the reason why I've got so many different resources to be able to look at the same story. Now, sometimes one of the resources will really speak to me in regards to their analysis, and it makes sense. But then I can look at some op-ed pieces on somebody who you can tell really likes the stock or likes the company, and they've got an ulterior motive. You can usually see through that. You can usually see that they like the now, for me, there's a couple of companies that I like, but I won't ever push them. One of those companies, actually two of those companies, are Palantir and Xroff. I may talk about them, but you'll never ever hear me say, go buy these stocks. I will never pump. Now, a lot of these articles will pump a stock. You need to go buy this because it's trading at this. I won't do that. I will give you my insights behind it. I'll look at the news and that makes sense. Or I don't think that makes sense. So I give my insight. But a lot of people out there will tell you, I'll use one famous person who hits a button and it goes, buy, buy, buy. I'm never going to tell anybody to do that. I just won't. Comes back to when I do analysis, I tell you what you need to hear, not what you want to hear. And I think a lot of people got to get past that. I don't want to stroke your ego. I want to help you. I want to help your portfolio grow. Oh, I like that. I don't want to stroke your ego. I want to help your portfolio grow. I got to write that down.
I like the way you've just trademarked your own personal statement there.
Absolutely. Got to do it.
So you read something, you see what makes sense. And from there though, Glenn, here's where I often differ from many investors is I don't see the stock market as a binary place. You either buy, you sell, or you buy and you stay out. In my opinion, the world of options really does give investors a more nuanced approach. Like, I am somebody where if I feel that a stock isn't necessarily going to fall, but can be very volatile, then I think that gives really great opportunity to sell put options, for example. I am also somebody that completely disagrees with the idea that options are more risky than stocks, because if I buy a stock and it goes down by 1%, I've lost money. If I sell a put and the stock goes down by 1% over a period of time, I may well have gained because of the time value, etc. So do you think that when people do actually make sense of the information or the news that they get, is there enough of an understanding out there about how to handle that? No,
that's an unfortunate reality, because I think that most people in the market feel that the market is binary. That you're either going to buy or sell. I think most people feel that way. I think that there are a smaller portion of people who learn how to trade options. I think that that's such an important thing to learn. That's such an important tool to have in your tool belt. But a lot of people are afraid of it. And you made the perfect statement that people think that options are more riskier than stocks. I want to stop that right here. Yeah. Because options were made to be less risky. When you buy or sell, you receive a premium. That's all you get. You buy, you pay a premium. That's all you lose. That's it. People can't wrap their heads around that I can buy a stock, it can go down to zero, and I lose all my money. But if I buy an option, the most I can lose is the premium I paid. That's it. So options give you a set number of how much money you can make and a set number of how much money you can lose. If you don't learn anything more about options, that's it in a nutshell. You can't lose any more than what you paid for the premium. You can't lose any more. You can't make any more than what you receive for selling the premium. That's it. And I think that if people can understand that, whether you're a buyer or seller of an option, There's no way that anybody can say that options are more riskier than stocks. They were designed to be less riskier. And if people would understand that, more people would trade options. And in a situation where, well, I don't think the stock's going to go way down, but in selling a put, you get an opportunity to make money on indecision. You get to make money on indecision. How much easier can you get on that? You get to make money on indecision.
I think it's important to know the impact of your decisions, let's say, in an option scenario. If you sell a naked cover call, and we don't need to get into this, obviously. If you sell a naked cover call, you are absolutely opening yourself up to a lot of risk for sure. But certainly, I think that there's perceptions about options that really deserve further interrogation before you decide on a position you're going to have on them. And my take on them is, I think that they're a really interesting tool and technique in order to introduce nuance. But you certainly can take an approach to the stock market that is much more than buy and it has to go up, sell, and it must go down. Certainly, there's more to it than that. Can you walk us through, Glenn, your routine around market sentiment as distinct to stock sentiment, market sentiment?
All right. So when I'm looking, from the VectorVest system, I'm looking at the color guard. What's the main color I see? Yellow. What do? I'm cautious in the positions that I play. So I'm not trying to hold anything long-term. I'm going to try to make the money short-term. Depends on if I want to be a little bit more active as a day trader. I take what the day gives me. It could be up today, it could be down tomorrow. But if I can make 2 to 5% a day, no matter which way the market is going, I'm going to be a happy investor. Let's even break it down. If I can make 1% a day, that gives me 20 trading days in a month, thereabouts. If I can make 1% a day, that's 20% in a month. That's what I call reducing it to the ridiculous. 1% a day. That's not half bad. In a trader's market where the market's up one day, down one day, or looking at, from a market sentiment, looking at where's my market timing graph? Am I sitting in a channel? Am I going to play the retracements from support going up or play to the downside, retracing from resistance on the way down? Man, you can stand 1% a day. John says, did you say 2 to 5% a day? I know, and you see what I said, John? I even reduced it down to the ridiculous. I did. 1% a day. Would you agree with 1% a day, John? 1%. 1%.
Not that easy, Glenn.
It's not.
In reality,
I'm not, but if you could, that's not half bad. I hear you. I hear both of you, both Susan and John. I hear you. But it being a trader's market is hard. It really is it's hard trying to hold stocks 2, 3, 4 days. Unless you put tight stops on them, you can do it. But this understanding from a market sentiment, this is more of a trader's market. Then you accommodate your trades, your investments based upon that. Does that make sense?
Well, absolutely.
Market sentiment.
You know what I think is really important here is that somebody knows themselves. Is that, Glenn, I wouldn't consider myself a trader. I am, and people who've been on the show have they're clear about the type of investor that I am. And so I don't need to elaborate on that. But I think the fact is that you and I both know ourselves, relatively speaking, quite well in the market. And knowing that and then, charting your course then thereafter is very, very important. But I would also ask you that, and maybe another question, which is, and this is obviously like asking about like who's your favorite child, which I would never do, Glenn. But what I do want to know is, what are your favorite tools in the market? What are your favorite tools? Sorry, not in the market, in VectorVest to help you navigate the market? And I'll tell you mine.
All right. So my favorite tools within the system, from a market timing, you're asking this from a market timing perspective?
Mm-hmm. Sorry, across the VectorVest system.
The searches, being able to make searches germane to my investment style. What am I looking for? If I'm a little bit more aggressive, I can make a more aggressive search. If I'm trying to be a little bit more swing traderish, and we've got searches for every type of investor, but then maybe I'm looking for more specific stuff and to hone in on. So for me, it's going to be the searches, the ability for me to find the types of stocks that I'm looking for based upon what's going on in the market.
So Unisearch.
I think that's the best answer I can give, I think.
Okay. Unisearch is what you particularly like?
Yes.
Okay. Two things I really like in VectorVest. One is VST. So for anybody who's not familiar, VST is value, safety, and timing. I love the fact that there's so much packed into that number. We've got long-term price appreciation potential, predictability and consistency of potential performance, as well as the direction, magnitude of that direction, and the dynamics of the stock price, all packaged into one. Above one is favourable, below one is favourable. The system ranks all stocks by VST. It's a combination of both fundamental and technical investment. So I think that is a super powerful number. And again, anybody who wants to try that out, click on the free stock analysis link that Joey put into the chat and you'll see. My other one is CI. I really like the comfort index, Glenn. I like the fact. So the comfort index, to anybody who's not familiar, is a stock's ability to withstand severe and or lengthy price declines. Somebody like me, who is more of an investor than a trader, probably more of an investor than a trader like Glenn would be, likes that. I like seeing a stock's ability to withstand severe and or lengthy price declines. I do not want, Glenn, a severe or a lengthy price decline. Those two are my two go-to indicators. I really like those two. I think they really do pack a punch. And can I, as we come to the end of our conversation today, one that I could continue for much longer, and hopefully there'll be many more times I get to interview you over the years, Glenn. But I do want to ask you about the one thing that everyone's talking about, and that's interest rates. And the interest rate conversation has gone from absolutely they're going to keep going to absolutely it's going to be a pause to maybe we're back on board again. We have the debt ceiling conversation that has been going on. That has now been basically put to bed. We have a divergence in interest rates. In the US, they've increased them 10 times in a row, fastest in 40 years. In Europe, it's been increased 7 times. And Christine Lagarde said they're absolutely going to keep going. Across the border here in the UK, Andrew Bailey has increased them for 12 times in a row. And the inflation in the UK doesn't seem like it's slowing down, but certainly not back to the pace of where it needs to be. So it is the big news story of May 2023. Can you tell us what's your take?
That's a lot. All right. Let's talk about it this way. We had a rustling, bustling economy from 2016 all the way up to 2000, what are we in? 22-ish or so. We just rocket. I think that a lot of people don't realize that the product of a rustling, bustling economy, and I'm not an economist, and I know you are, but I'm not. The product of a rustling, bustling economy is going to be rising prices. That's just, I don't think you can curtail that. That's my thinking. I just don't. The market's running, prices are going to go up. Inflation is going to go up. Okay. I think that throughout the midst of this, the Fed said, oh, it's okay. It's transitory. My statement then and there when he made that statement the first time was that inflation is bad. It's just bad for us, because prices are going to rise up. But if we got an economy where people got money in the pocket, they're going to pay them more money. That's what we do. Okay. Then inflation gets up to 9%. It's really up there. And it's like, oh, hey, sorry, we're going to step back. It's not transitory anymore, so we're going to have to effectively go after it. Now, knowing that inflation was going to be a product of a rustling, bustling economy, At some point in time, you should interject it a little earlier. Then you wouldn't have had to raise so far, so fast. You could have just, all right, fine, inflation's getting hot, let's go after it. They could have done that and slowly curved it down instead of watching inflation shoot up. They could have put it on a 45-degree angle to make it curve over. But we put it on almost a 90-degree angle, a strong angle going up. And then, well, the only way to get through this is we're gonna have to raise interest rates. We're gonna have to do it hard. We're gonna do it fast to go after it. Okay. On paper, I don't think the Fed's got the ability to pause yet, especially if they're aggressively, adamantly going after a 2% inflation rate. Number one. Number two, the economy is still growing. People, even with all of this possibility of a recession, I still think we're in a recession, just not with all of the pieces of the puzzle fixed because of the job market. But with that happening, people getting scared, people going to pull out of the market. I'm watching just people in general getting nervous enough and they're pulling out of the market. They can't pause yet. They just, or else you're going to watch inflation. If the economy is growing, you're going to watch inflation rear its head again. And then what? Well, you screwed up on the transitory thing. You don't want to get caught out again saying we stopped too early and now we got to go after inflation again, harder and heavier. Number three, the Fed said that he was going to cause pain to the economy.
I know.
He was transparent about that.
I find that so hard, and I know why he said that, but I just find that so hard to think that somebody says it doesn't matter, doing it, causing pain.
But somebody had to.
Yeah, I know.
You know, and we talk about the debt ceiling. No matter what side of the fence you're sitting on, somebody's going to have to stop spending as much as we're spending. But no president wants to be that bad guy that says, I'm going to cut spending in all of the places that all of you don't want. That's real. But it's got to be cut it's got to stop at some point, or what? We're just going to keep raising and raising and raising and raising, and then we're going to get to an unfathomable number. Everybody is. That's not just here, that's across the globe. Again, I ain't the economist, but this stuff is not what we can hold on to. So my conspiracy theory thought is that at some point in time, we're gonna have a global financial reset. I don't know what that looks like at all. And I don't even know if that really can happen. But
do you not think, I mean, to a large degree, 2008 was that? I mean, look at the sheer volume of debt that was absorbed. I mean, look at the massive amount of money that was printed. Why didn't inflation happen for 15 years, Glenn? Is because it was absorbing the debt that had been created and burst ultimately at that point.
So we had a rustling, bustling economy, and we had all of this quantitative easing, which we threw so much money into the economy,
and then found its way into the market, Freudian slip.
So now all of this money is out there. You can't get it back. Well, raising interest rates, we're gonna rein it in. There's a difference between reining it in and getting it back. You ain't getting it back. You're not. So that's my step out into the world of an economist. And I don't know all of the things that make it all work. I'm just looking at it on paper. On paper, this ain't good. And we're going to raise the debt ceiling. And the thing about raising the debt ceiling is not raising the debt ceiling on money to spend. I think a lot of people don't realize this. It's raising the limit on the money we have spent. This ain't going further into the money that we still want to spend. This is on the money we've already spent.
And again, when you look into the nuance of that, it's after the next presidential election. It is, and there's a specific, the limit that is being applied on the non-defense spending versus not. It's an interesting nuance there about where all of that is going. But Glenn, we are right up on the clock. Thank you so much indeed for being here with me today. I've really loved talking to you. I've got to ask you a range of questions that I wanted to ask and that I know lots of other people are interested in too. So thank you so much indeed for being with me today.
Well, it's my pleasure to be here. I love having conversations about what goes on through my mind when I look at 60 different pages up at any given time to try to go through what's out there, what's going on.
Well, it's a pleasure, Glenn. It really is. So there you have it. There you have the insights from the man himself, Glenn Tompkins. You've got a sense of the type of news that he really looks at. You've got a sense of his routine. You've also now, of course, had a sense of the way in which he looks at various different stories, how he navigates the VectorVest program, how he looks at market sentiment, and also how sometimes he considers earnings to be noise themselves. I really appreciate the fact that he took the time out to be here with me, but also that you took the time to be with me here today. And I'm delighted that we see some follow-on points coming in here, like how do we find the same stocks to trade over and over? What I would say, Sal, is that if you stick with us here on YouTube, Glenn is going to be delivering his mid-afternoon market update after this, and make sure and put that question to him then. Mike said, thanks Susan and Glenn, you're super welcome, Mike. Martin says, that was great, do it more often. We certainly will indeed, Martin, and I'm going to be introducing you to more and more of the VectorVest team over the coming months, as we share stories all around how we individually, how we invest, but also the characters that we bring to the table as well, so that you can get more of a sense of what it's like here at VectorVest. And Maria says, great info. Thank you, Susan and Glenn. And Maria, thank you as ever for being here with us. On that note, I'm going to thank you all for being here. I'm going to see you again soon. In a couple of weeks' time, we've got our ESG and Tech show, so I'm going to see you then. And of course, next month, I'm going to be here for Savvy Investors at VectorVest. But separate to that, you're going to see Glenn lots more here on the VectorVest channel at YouTube, including in a couple of moments, like I say, for the mid-afternoon update. And also, if you can, check out the VectorVest International Forum as well. But in order to do all of that, click the like button, of course, for this particular episode, and also subscribe to the channel with the bell so that then you'll always be notified when either me or Glenn or any of the team are going live. But on that note, I wish you all a really, really, really wonderful Wednesday. Thank you for being here with me, and every best wish.